Namaskar and good afternoon to all the elite of Pune, invited guests, ladies, gentlemen, and also the media. Since I spoke at the celebrations of the bank on its 90th foundation day last year, the uncertainty in the global environment has only increased. So the impact of all these uncertainties is being felt across the countries, each according to its own paradigm, both on account of the degree of exposure that they have to these shocks and as well as to the extent of the preparedness of those countries. But amidst all these uncertain global situation, India's resilience stands out, and several favorable factors such as strong macroeconomic fundamentals, a young demography, and greater reliance on domestic demand provide the core strength to the Indian economy and therefore to withstand global spillovers and grow at a higher aspirational trajectory. Post-COVID, you are aware that India rebounded strongly and recorded an average annual growth of about 8% during 21-22 to about 24-25. It stood out as the fastest growing economy, and this economic resilience has continued, particularly in the April to June quarter this year as well, where our GDP has grown by 7.8%. So this resilience is not accidental at all. They reflect proactive fiscal and monetary policies, bold structural reforms, massive infrastructure creation, both physical and digital, and improved governance and enhanced competitiveness over the last decade. As a result, today, as we stand in the last few months, we've seen global rating agencies reconsider their view on India. It started with Standard & Poor upgrading India from BBB minus to BBB in August 2025. After 18 full long years, our ratings have gone up. The next came among the rating agencies, Morningstar, DBRS, also upgraded us to BBB from BBB low in May 2025. And this reaffirmed our position as one of the most dynamic and also resilient major economies of the world. Only recently, meaning a couple of days ago, the Japanese credit rating agency, Rating and Investment Information Incorporation, that is R&I, they're popularly known as R&I, recently upgraded India's long-term sovereign credit rating again. They did from BBB plus to BBB. So as a result, you see that over the last few years, India and its Indian economic advisors, both of the government and others with whom they engage, have re-looked at what the fundamentals are. And as a result, you see the ratings go up. In this macroeconomic and also overall economic performance, the performance of our Indian banks stand out particularly well. From the days of bank being under stress, one after the other, and 2013 and 14 ending with the twin balance sheet problem in a fragile economy. Today we have twin balance sheet advantage in an economy which is third almost, today comfortably at fourth, but third largest economy in the world. What a remarkable turnaround in the last 10 years, and largely also to the professional management of banks and their running of the institution, overcoming the challenges which they inherited due to not so professional practices. And as a result, the 4R strategy which Government of India took up, also at the time the IBC coming in, together Government of India planning and having an NARCL set up, have all helped banks to come out of the difficult situation that they were in. And today we are talking about banks in India doing very well. But among the banks in India doing well, what was considered to be a regional bank, a provincial bank, in perception, and also from the point of view of taking pride that Maharashtra could come up with a bank 91 years ago, which attended to the financial needs of growing small businesses in those days under the British. And today, as a result, you're celebrating its 91st Foundation Day. I'm here referring not just for the 91 years that you existed, but in the last few years, particularly after the prompt corrective action as guided by the Reserve Bank that most banks undertook, about which Secretary, Department of Financial Service referred to in detail. This Bank of Maharashtra consistently stands out as a top performer among public sector banks in managing both gross and net NPA ratios. One big credit. It is satisfying to observe that the bank's overall performance also continues to excel. So Bank of Maharashtra has achieved remarkable results across a wide range of key performance indicators. For the sake of the media, although all of us have been given all the data in the video presentations that we saw, I would like to highlight some of these accomplishments of this bank. Bank's return on assets, Maharashtra Bank's return on assets is of 1.8% in 24-25, is way ahead of average return on assets of public sector banks, which stood at 1.1%, so well above. Also, Bank of Maharashtra's cost to income ratio, the CIR, which the Secretary referred to, for the year 24-25 stands at 38.4%, which is not only the lowest among the public sector banks. The average among public sector banks is 50.1%, but more important is the fact that 40% CIR or below 40% CIR is regarded as an excellent benchmark, and you are at 38.4. And you are at 38.4, and on an average, the public sector banks in India are at 50.1%. Similarly, Bank of Maharashtra CASA ratio, again that which was referred to by the Secretary, Department of Financial Services, is at 53.3%, which is the highest among the public sector banks, where the average CASA ratio among the public sector banks, the average CASA ratio is 38.8%. Yours is 53.3%. So it surpasses all the majority of the public sector banks. The other financial aspects which are worth recalling here as of June 30th, 2025 are that your gross NPA is at 1.74%, and net NPA is at 0.18%, which is a multi-year low. and the provisional coverage ratio improved to 98.36%. Total business grew by about 14%, over 14% on a year-on-year basis to 5.46 lakh crores. So 14% growth in the total business. And total deposits increased by over 14% year-on-year. And where did it reach? It reached 3 lakh crores. Again, in the list of performance, which has been very appreciative, is in the advances that you've given. The retail, the agri, and also the MSME have improved to 62.10% of gross advances, meaning retail, agri, and MSME seem to be the highest in terms of the credits that you're giving. Retail advances alone grew by 35% to about 71,966 crore on a year-on-year basis, while MSME advances have grown by 5.65% on year-on-year basis. That is the point which the Secretary, Department of Financial Services, highlighted, that while performance is brilliant, I think there is a over-concentration on retail, and his words of counsel was, you should also improve on your MSME advances. I stand with that advice. Your overall performance, your specific performance notwithstanding, a bit more concentration for MSMEs would also bring in laurels to Bank of Maharashtra. As regards government schemes, particularly those which are brought in for keeping all sections of India's societies addressed, Bank of Maharashtra's role in deepening financial inclusion across India is noteworthy. Jan Dhan Yojana, you've got about 1.2 crore accounts. Jan Suraksha schemes have also got about 1.16 crore in Suraksha Bima and 55 lakh enrollments in Jeevan Jyoti Bima Yojana. Atal Pension Yojana has about 17.7 lakh subscribers. Mudra loan, 33,000 crores have been disbursed to nearly 46 lakh sanctioned accounts. That's a sovereign guaranteed loan. You don't need to take any papers from anybody. You're giving for people who just otherwise wouldn't have been given any credit access. So well done on that. Similarly, on Stand Up India, as of 31st March this year, nearly 1,200 crore disbursed to over 5,300 sanctioned accounts. Stand Up India is something which in this budget too, I have emphasized that we need to take it further, because at the branch level, you're giving at least one to person from the scheduled caste background, one to a scheduled tribe background, and one to a woman compulsorily at every branch level. And I would think Bank of Maharashtra can definitely go further in the Stand Up India scheme. PM Swanidhi, another one which benefits the street vendors. Again, that which is completely guaranteed by the government. 1.67 lakh street vendors have been supported by Bank of Maharashtra, and well done on that as well. Today, as a part of this program, I think we saw quite a few initiatives which are new business and non-business initiatives as well, which have been highlighted. I don't need to repeat them, but very well, you need to keep coming up with newer and newer schemes or portfolios or banking and non-banking activities. I wish you well on all of them. So the initiatives that you've taken are very heartening, particularly as regards the bank branch network expansion that you've done. It's heartening to know that today, more than 55% of your branches are outside Maharashtra. That is where I began by saying a bank which is regional, perceived to be regional, perceived to be very identified with the province, performing extremely well and giving a good run for the public sector, other public sector banks, is so very good a news. I would also say even better news for me is for such a performance also to accrue to you from your spread of branches outside of Maharashtra. You need to be present in Maharashtra. Your identity is so close to the state of Maharashtra. But being a public sector bank, your expansion outside is very praiseworthy, 55%, and also making sure that they are performing up to your standards. Such diversification reduces concentration risk, strengthens resilience, and enables the bank to serve a wider spectrum of customers. And also the establishment of your first international banking unit at Gift City opens up the world for you. The bank has recorded its first ever international business in its balance sheet this year itself, and that's a very good start. And I appreciate the bank's board for being strongly future-looking. And also I commend the bank's role in financing projects of national importance. The Eastern Rajasthan Canal project is a very important step in this direction, and I appreciate the bank by moving forward in taking up such accounts. Also, the strategic co-lending agreements with several NBFCs stand out if you look at the performance of Bank of Maharashtra. As I said earlier in one of the symposiums which was held about NBFCs in Delhi, a deeper institutionalized collaboration between NBFCs and public sector banks are required. I had said this in that symposium. And public sector banks are needed to engage proactively with NBFCs on co-lending, particularly for priority sector lending. So these partnerships help enhance credit flow to the underserved sectors, ensuring that funds reach the ultimate beneficiaries at an affordable cost. So it is very encouraging to learn that Bank of Maharashtra's business through co-lending has grown more than 15 times, reaching 3,175 crores in the year 24-25. That's an immense performance. And I appreciate once again the bank's board for having taken this courageous and absolutely purpose-serving step, and you've done very well on that as well. I'm also pleased to note Bank of Maharashtra is leveraging digital footprints such as UPI to extend cash flow-based lending to MSMEs. True digital transformation through the introduction, today I can see, of advanced new products, including its cutting-edge mobile app, Zen Life. So the next decade will be very crucial as this bank will mark its centenary celebrations. As you look to the future, to build your legacy, it is important to remember the financial institutions play a crucial role in the national infrastructure building and the efforts which go towards it, particularly for MSME enterprises. So as India's economy grows, so does the demand for credit and innovative financial products and capital expenditure. So financial institutions like Bank of Maharashtra therefore must maintain strong balance sheets to fund significant investments in infrastructure, industry, and also in innovation. With the uncertainty remaining a defining feature of the global landscape, the role of banks become even more critical, not just as custodians of savings, but also of engines of growth, providing the finance and support that businesses and entrepreneurs need to navigate volatility, seize the opportunity, and also drive innovation. Even as we speak about everything that we are doing and doing well, the one principle that we can never forget to mention or to adhere to is adhere to the core principle. And that core principle is customer trust. That's the foundation to any banking. Every complaint must be seen as an opportunity to improve rather than a gripe. It is an opportunity to improve, to innovate, and also to reinforce the trust in the minds of the customers. Grievance redressal must go hand in hand with root cause analysis, systemic corrections in products, processes, and conduct, and a commitment to ensure the same complaint does not arise again. And particularly when we repeatedly speak about our youth dividend, the population dividend that we have in terms of younger generation leading us, and their numbers in the productive years being very high, it is important that banks really win their trust, retain their trust, and serve their confidence, so that that is what is going to be your centenary years foundation, if you ask me. So technology will have to be part of this serving the customer. Even the Honorable Prime Minister, while talking about the GST's next gen reforms, said, Nagarik Devo Bhava. All of us in this country have repeatedly heard Atiti Devo Bhava. But today, Nagarik Devo Bhava, whether it is tax policy or banking service, I would think it's imperative for all of us to look at how best we can be nimble-footed to address our Nagarik's requirements. The success, of course, of UPI shows what interoperability can achieve. A recent IMF note highlights the potential of UPI's interoperable design as a model for the entire world. So I think it is for us to innovate and look at where the use case driven collaborative efforts can make banking far more technology driven, and that will also seize the imagination of the young clients that you would have. However, it is important that digitalization alone is not enough. Integrity, empathy, and human judgment remain irreplaceable. However much we talk about technology, I think it's important for us not to lose that human judgment and that advantage human intervention, human empathy can give in our banking service. So in conclusion, inauguration of this corporate office is not just about bricks and mortar. It symbolizes the strength and the institutional capacity that you have, strategic clarity that you provide, and cultural confidence that is needed to compete at the highest level. So I wish the bank all the very best for the centenary year and many more centuries that you can make in serving India's banking sector and also India's march towards Vikasit Bharat 2047. Thank you very much.
Thank you, Madam, for inspiring all of us with your valuable words and for your best wishes. Thank you so much. Means a lot, ma'am. Your words truly remind us that banking is not just about transactions, it is about transformations. We once again take this opportunity of thanking you, ma'am, for gracing this occasion with your valuable presence. Thank you, sir, for joining us here today. With this, ladies and gentlemen, we have come to an end of the celebration of 91 years. We celebrate the foundation that we continue to build every single day together. On behalf of the entire Bank of Maharashtra family. Once again, I'd like to take this opportunity of extending our gratitude to the Honorable Minister of Finance and Corporate Affairs, Smt Nirmala Sitharaman ji, for being a part of the day.